Hello everyone, and in this video we are going to finish up Chapter 5, Learning Concepts. The first one I'd like to talk about is Learning Objective 5.4, which is in your book on page 170. We're going to describe payroll within the context of business expenses. Now, keep in mind, payroll is the most important part of an organization because you need your employees to run the organization, but payroll is part of the cost of employing them, of course, and it's one of the biggest expenses that an employer has. Some other expenses that the employer could encounter could be recruiting, hiring, and training. As you know, some employees have to have some training, and the average new employee cost is $4,000. Some other costs, depending on the type of business, could be tools and uniforms in regards to that. And this is covered on page 170 in your book. Also keep in mind, on learning objective number 5, there are some rated labor expenses to a company's profitability. So other things to keep in mind is that other expenses comprise up to 50% of the employee's paid. So other expenses include tax payments, possible retirement plan contributions, paid time off, and other employer paid benefits. So those are extra expenses that the employer must take into consideration when they do employ some employees. Employers also need to consider the distribution of costs. So the number of employees per department is called labor distribution, and this is on page 170 and page 172 in your book, which possibly can influence each department's profitability. So a labor distribution report, this is where the organization will classify each employee into a department, which in that department they will absorb the expenses within the organization. If a company does not have this type of classification, all labor expenses are evenly distributed among all the departments. So it depends how the organization is set up. Potential for misclassification of expenses would have incorrect data for decision making, which could lead to poor decisions. One thing to keep in mind is that organizations should do department classifications, because then they can kind of monitor which departments could possibly be running over on overtime, which departments maybe are top heavy in regards to employees, because it is the biggest expense of an organization is the employee self, along with payroll and benefits. Some examples of a labor distribution, ABD has 85 employees in 3 departments. They break it down into administration, sales, and manufacturing. Some non-department classifications, total amount of payroll is 500,000. Each department would have 166,666 of payroll costs assigned to them if they didn't do any type of classification. And this is covered on page 172 in your book. So an example of department classification, so ABD has a payroll of 500,000 or 5,882 per employee if it's allocated evenly per employee. Then administration payroll costs, if you take that amount multiplied by the number of employees in the administration department, would equal $58,823.50. Sales, you would use the same amount, okay, if it's allocated evenly, multiplied by the number of employees in the sales department, they would have payroll allocation of $88,235. And manufacturing has 60 employees, which is the bulk of the payroll, in the amount of $352,941. Now, allocating the cost according to the number of employees yields a more accurate amount than the equal distribution of labor costs across the 3 departments. So keep in mind that it is more easy for companies to identify possible overruns and extra expenses if they do break it down by departmental classification. All right, learning objective number 6, which is on page 173 in your book. It's the last learning objective of the chapter. This is a complete benefit analysis as a function of payroll. This is very important that a company does this analyzation in order to make sure that the benefits are allocated and reported correctly. Benefits are the highest, second largest expense for employers. As you know, most employers have paid time off and holiday pay, which involves paying employees for not working, possible bonuses and raises, which can increase payroll taxes, and the rising cost of insurance means also an increase in taxes for employers. Now, this is an example of an analysis report. As you notice, they kind of break it down by the employee's costs and the employer's costs. They have different categories for health and welfare benefits, retirement plan benefits, and then total PTO and holiday pay. This is a great analysis to do, especially during budget season, in order to make sure they can generate enough revenue along with controlling their expenses to afford to give employees bonuses and possibly even wage increases. The annual total compensation report is a complete picture of the employee's compensation in the organization. It includes the employee shares of taxes and benefits. So it's important that as a payroll accountant to determine the employee's annual compensation. Okay, so you would also utilize this when you are completing their W-2s. This is an example of an annual total compensation report. As you notice, is a yearly statement. It kind of shows the cash compensation, how much the benefits are, the employee's benefits, and the employer's contribution, and then the total compensation value. So it's a great reminder to remind employees that just because the company does offer benefits along with paid time off, there is a cost to it. So it is important for employees to understand that is part of their wage with the organization. So summary of the employee payroll tax responsibility. As you know, taxes are part of the employer's cost of doing business and having employees in their payroll. Employers have the responsibility to report all those taxes to the federal, state, and at the local levels, or there are penalties. It is very important if you are a payroll accountant considering going into payroll to understand the connection between the final check of the year and the form of the W-2, because remember that is used in order to complete the tax returns for each employee. The benefit analysis report allows the employer to understand the costs associated with each employee, which is important. You want to know how much it is costing you to employ an employee on the books to make sure that the organization can afford it. And then the total compensation report allows the employee to understand the scope of their pay. That is the end of the introduction to Chapter 5. In the next videos, I will be going through the exercises in Chapter 5 to assist in your learning with the problems that are in McGraw Connect. Thank you.